Hi guys, and welcome to the second part of the bonus lessons. Now, many of you have been asking me what moving averages do I use, and I did say this would all be inside the course. And during the duration of making this course, just like the rest of the lessons and just like the first bonus lesson, I have been developing this strategy and working on it over the past few months. So I'm happy to say I can put this in the second bonus lesson. Now what we'll be doing is, first of all, I'll be explaining how the EMA works. Now there are two ways to utilize the MAs. One is for trend direction, which means filtering the overall trend. And the second reason is to utilize an MA crossover in line with any of the other trade setups and technical levels to help us get even more confluences for an entry and exit. We will start off with the crossover strategy and what MAs are needed, and then we will add the trend filtration for maximum accuracy. Now we'll start off by adding the EMA and the SMA. Now the blue EMA is the 8. You can see that here. The length of this is 8, and we apply this to the close of the candle. We then go to the moving average, which is the SMA, and this will be the 18, and this will be red. And again, we apply this to the close of the candle body. Once this is selected, we can start to mess around with this and see some of its real use cases. Now, because this is a very shorter period, so the length is an 18 and the length is 8, this means there's less data constricted and applied to these moving averages, meaning they're much closer to the actual price action itself, meaning they act as very good levels of support and resistance on the daily and 4-hour time frame, potentially also below. However, I will stick to the daily and 4-hour for this purpose. Now the purpose of these MAs is to utilize an MA crossover in line with a technical level, a Fibonacci bounce, or any other trade setup you find. By awaiting an MA crossover to either the upside or downside, we give ourselves a high accuracy and high predictable opportunity to time the market in whatever direction the MA crosses over to. So for example, right now we have an amazing moment on Ether, a great potential setup right now, where we're potentially looking to cross over to the upside, and in fact we actually have just crossed over to the upside right now. Now if I zoom in, you can notice just through the gaps of these candles we have crossed over to the upside right here. Now this means the downtrend and correction has ended, and we are looking now to apply some key levels in line with this to find the ultimate long opportunity. So what we can actually do here is we can get the horizontal tool and we can apply some key levels and really get this in line with the moving averages. Now we can already see we have some high highs and higher lows. We've now tested this level after correcting from testing another high. So we fell down from this level here. We've tested this level twice. The first time we pulled up, we hit the 18 SMA, we pulled back down, we failed to break above. We've now broken above the EMAs, they've crossed over to the upside, and price is now consolidating right here in this zone. So what this tells me is we found a new leg of support. We're now slowly building up momentum from upside breakout. So we can easily eye up from this period here, the 339 level. If we drop down to the 4H, you can see this even clearer. And this is where we fine tune our entries and really find the maximum probability entry. As we can see, we're looking at this retest in a much closer time frame. We've pulled up, we've broken through the MA here. We've come up and tested a new high. We've hit the resistance level. We've pulled back down, but yet we've held not only on the support level, but the MA here has also held as support. Just as you can see here, the candle closed pinpoint on the 8 EMA. We've then bounced up again, slowly correcting and testing on these MAs before breaking down. We've then touched the MAs all the way down, holding as a resistance trend line. We've then broken up. The MAs have finally crossed over to the upside again, and on the way back down we've retested these MAs. So if we go back to the daily, we can easily see now we are looking to start making highs again and slowly move away from this support level, which we have been testing for a long time. So if we go to XRP, we can apply both of the EMAs again. The reason I choose Ether and XRP is due to the volatility and the way they respect the key levels. Not only the key levels, but the moving averages and the Fibonacci's. This makes it much easier for someone who's new to the market to actually pick up these skills and start to learn how to apply them. So what we can see here is, we'll start from the initial breakout of XRP. What you can see here is in the very beginning of time, the MAs were consolidating. We had a lot of movement. We were stagnant. We were stagnant for years. We finally crossed the MA to the upside. We then started holding this MA, in particular the blue 8 EMA. We began to hold this as a support level. And as you can see, we barely broke below this level. And when the real uptrend began, we started to find nice levels to continue entering as price corrected and went straight back down to the 8 EMA. As we go up, we can see price just really gently supporting this level. Even when breaking through, we ended up having a slow curve, slowly respecting this level. A breakout below did happen, however the spike back above did close on the supports here. We then continued soaring higher, each correction and candle close slowly brushing against the MA. This eventually took us to all-time highs and a growth of 4,000%. Every step of the way, guys, there's a test there, another test there. We've come down, we've tested twice. We've then finally broken through and began holding as resistance instead of support. We then knew the bear trend was coming. The MAs had finally crossed over to the downside after 3 to 4 months of pure upside momentum. When the MAs cross to a certain direction after an extended period of time, we can start to identify not only key levels of exiting and entering trades, we also know the trend direction is beginning to shift to bearish or bullish. As you can see here, we slowly consolidated down. However, we're holding as resistance the whole way down, guys. And breaks above always seem to still support this level. So as you can see overall, we're looking at key crossover points to utilize with our trade setups and get the perfect entry level. So right now on XRP, we can look at this here. This has now repeated itself twice. We've broken up, we've come down, the MA's crossed over and we made new highs. We're now repeating the exact same cycle. Price has been falling down, we've been holding as resistance. We now zoom in, we see we've broken through this level. We've come back down and we're now holding as support. The current candle has also broken through this level and also broken the 18 SMA. What this means is once we sustain above this level and the 8 EMA becomes a support level again, a crossover should happen, and this will confirm the launch to new highs, if not at least the previous high. However, I have been analysing XRP for a long time now, and this could be the final launch before new highs are made. We're looking at even 34 cents for the next run. So what we're going to do now is, you know how to identify key points of entries and exits, profit taking zones and entry zones. We're now going to combine the new addition to the EMA strategy, and this is the 200 EMA. Now we have these two EMAs for the crossover. We're now going to utilize trend filtration in line with this to get the maximum accuracy we possibly can. So we'll go back to Ether for this example. So if I click on this EMA here, you'll notice we have the 200 length applied to the close. All we do is we simply untick this, as I already have this set. Now this is a much longer time frame and takes account the past 200 days worth of data, not just the 8 or 18 days. So as we can see, we have a much larger range of price data calculated into this MA, meaning it's not as volatile and does not stick to the price action itself, meaning it's much more stagnant and a perfect way to gain the overall trend bias. My favourite thing with the 200 EMA on either pair is the way it holds as a perfect level of support for the long-term spikes, manipulated spikes down to random levels, which would not make sense unless you had the 200 EMA set up on your chart. So as we go here, we start off from the very beginning of time. where Ether finally started exploding in value, breaking all-time highs and exceeding to $400. Once we broke the curve here, we came up again, we came down, we not only held the MAs as support, they crossed to the upside. We then held the 200 EMA as support, before slowly exploding in price. And what happened is we did not test the 200 EMA for almost 3 months. However, we then had a manipulated spike from $93 all the way to $25, and seemingly a completely illogical level only tested exactly on the 200 EMA. We then spiked through this price slightly. We then spiked all the way back up in the same trading hour. We then continue with our uptrend. We then experience a huge crash of 60%, falling all the way down to $135. And with no coincidence, we hit pinpoint on the 200 EMA. The minute we touched this level, we spiked all the way back up and continued our next reversal to the upside. We then collapsed again. Price fell all the way down, not only to a key support level, but also pinpoint on the 200 EMA yet again. Again, the minute we hit this price, we then correlated this with the support level. We also had a zone placed exactly here. We then add the Fibonacci. We then see we've not only tested the 78.6, we've breached a support level, we've touched another support level, we've then hit the 200 EMA. Since then, price has carried on spiking to the upside, creating new highs once again. We're now stagnant and consolidating on this zone. Price is about to break out, but the best part of this is we know whether there's new highs or not. A manipulated spike to the downside, we can calculate in line with key levels to know exactly where price will go next. So for this example here, should price spike up here and then continue to crash down in a large case of manipulation, we can put this level in line with here. So we can put that there, and we can imagine in a few days time or in a week's time when price has already gone up here, this EMA would be here. We can then calculate a spike down would at least possibly be within this region, which we can then apply with other key factors such as this, a key support level. We then see as the slow growth of the 200 EMA continues, it lines up perfectly with a support level and also exactly where we could potentially retest before continuing higher. This also applies exactly to XRP and is almost the exact same case, where the 200 EMA acts as perfect support the entire time. Same as Ether, once broken up, we did not test this level for months. We then see price went all the way from a bull trend, it fell all the way to a downtrend, and during this downtrend, the only time we actually found support was on the 200 EMA. We then reversed immediately off this level, never closing within this region. After consolidating for a few days, we had a final test of the 200 EMA and spiked all the way to the top once again. Price continued down. We then had 2 more spikes of this region before breaching up and doing the same yet again. We can now combine this in line with the MA crossover, another test of this support level. We have failed to break below this level. Should we break below the 200 EMA, we know we are now going to potentially be in a bear trend, especially for the long term and the upcoming months. The way this works essentially is if you're above the 200 EMA, you're always in a bullish trend, and generally price is going to continue higher over a longer term period. The minute we breach below a 200 EMA and start to test this level, from a resistance perspective, we know we're potentially about to fall into a long-term downtrend. Now, I have to take into note this only works on the daily and weekly. However, due to cryptocurrencies being so new, it's not necessarily possible right now to actually get the data on the weekly chart, and that is because there's not enough data even spanning back 200 periods. There isn't even 200 candles on this chart. So we can stick to the daily for now and take use of its high accuracy. And what we can do right now is anticipate this and combine this with key levels. So in the next lesson, we're going to combine all of this with the plotting zones, the Fibonacci, the MA crossover, and then we're going to apply this into the final crypto construct, one of the most powerful tools I've been developing for the past few months. By applying these together, guys, you're putting the odds in your favour, and you will likely never miss a trading opportunity. This can easily increase your trading tenfold and increase your profitability by 90%. I'll see you in the final part of the bonus lesson.